Okay, Han, I think we should get started now. It's just after 11 o'clock. Thank you, and over to you.
Okay, thank you. Thank you very much, Helen. Good morning, ladies and gentlemen. I would like to welcome everyone to this year's annual Current Trends in Shipping Symposium. We are delighted to be joined by so many participants this morning. This annual event is organized by the Ports and Terminals Group Council of the SMI. We follow a specific theme each year, and for 2021, we are looking at another unprecedented year and the greening agenda that's moving up in many stakeholders' list of priorities in shipping. The proposed and envisaged transition in areas such as energy transition, technological development affect both marine and shoreside participants. And in my opinion, it's becoming clear that successful transition requires stakeholders on both sides to work together. The government's Clean Maritime Demonstration Competition is enabling many of these collaborations, and the recently announced extension of it to a multi-year initiative is very welcome. And the recently announced Clyde Bank Declaration, supported by a number of countries that support the establishment of green shipping corridors between two or more ports, also recognize the need to facilitate partnerships among various stakeholders along the value chain. In today's symposium, we are not looking to answer all these questions, but hopefully we will highlight some of the challenges that faces us, as well as highlight the opportunities in front of us in this transition. We will start the morning with Richard Greiner, who is a partner in shipping and transport team of BDO. Richard has more than 35 years of experience in providing assurance and advisory services to the shipping industry. Richard's work covers a large number of areas, including due diligence investigations, audits and financial reporting to local and international standards, business planning, and shipping finance structures. He leads the Ship Operating Cost Benchmarking Study. He is the chair of the Taxation and Economics Committee of the UK Chamber of Shipping and the director of Maritime London. Richard will set the scene by telling us the latest confidence levels from the industry professionals in terms of market expectations and investment decisions. And he will look at some of the main drivers of business performance. We will then move on to Trevor Crowe, who is the director of Clarksons Research, a leading provider of market intelligence on shipping and trade and offshore and energy markets. Trevor has been with Clarksons Research since 1997, and today he manages a wide range of research activity and products, including market-leading Clarksons Research intelligence reports and websites. Trevor will provide us with a comprehensive review of the shipping markets, and in particular, the current intelligence and data that will help frame the critical decisions that the stakeholders across the industry will need to make in the context of the green transition in the coming years. Our third speaker, Ian Palacio, is the Business Development Manager of Portsmouth International Port. With over 25 years of experience within the maritime industry, Ian has been working with customers old and new at the port to drive new business across both ferry and cruise service areas. He also works closely with the commercial team at Portico, Portsmouth's international cargo terminal, to assist with the continued diversification of the cargoes they handle. Ian will provide us with first-hand examples of how ports are being reinvented for the green transition, and at the same time, he will highlight some of the important challenges that lie ahead for Portsmouth and some of the similar ports. There will be an opportunity to ask questions after each speaker, so we will have time to take those questions. Also, at the end, we will have a small panel discussion with all the presenters. So please use the chat function throughout the seminar to send your questions either to individual speakers, to to ask them at the end of their presentations, in fact, to all of them as well. We are looking forward to an insightful morning of discussions. I will now hand over to Richard to get us underway. Richard, good morning, and the floor is yours.
Thank you very much, Han. Good morning, everybody. Hopefully, we'll be able to meet in person for the 22 event, but today we have to make everything work with the hybrid technology. What I wanted to say at the outset is in this very challenging world, I bring you a considerable amount of optimism. Over the next 25 minutes or so, as Han said, I'm going to present the results of the latest shipping confidence survey and give a current perspective on the overall sentiment of the industry. And it would help if I put my slide on the right slide as well. Anyway, that's setting the scene. But I said that we're in an era of some optimism, but I can guarantee you there is volatility ahead. This is a slide I've used before for those of you who've seen a similar presentation in the past. All I need to say to you is there was a headline in the e-newsletter, the Daily Splash, yesterday, which was after I'd written these slides for this presentation. The headline was, "Extraordinary volatility of main shipping segments through the pandemic has been highlighted." And that really is absolutely foursquare. By way of illustration, for example, with the Baltic Dry Index, the BDI, I think in early October that was around 5,500 points. Yesterday it was at 2,700. At the beginning of this year, I think it had gone through the 2,000 barrier, going in an upward direction for the first time. And need we say about container box rates? Typically 5 or 6 times at least the rates that they were at the beginning of 2020, and even more on some trade lanes. So I'm reasonably confident that we have to maintain our lives in this era of volatility going forward as well. So the meat of the presentation today, as it were, is about the results of the shipping confidence survey. The problem you have with something of the nature of confidence is it's intangible. So the best way to address that is to try and put some quantum around it. And that's something that we have been doing for quite a long time now. We've been conducting a regular survey of the confidence of the industry. The survey was first launched in May 2008, and it's been carried out regularly since that point. So we have more than 13 years of data now. And today I'm going to quickly run through the highlights of the survey, looking at the respondents, the levels of confidence, the factors that influence business performance, something about costs in general, and something briefly about the freight markets. So firstly, this is the results of the confidence survey that was carried out in August and published in September this year. It's the most recent survey that we've done. Who have we asked? The respondents by type are as indicated here. So it's led by ship owners, ship managers, and ship brokers. So it is professionals in the industry, as Hans said. And where are those respondents from? They are from predominantly Europe and Asia. So now looking in more detail at the results from the survey. The first point is about the confidence itself. The question we asked all the respondents is to tell us on a scale of 1 low to 10 high, how confident they were about the shipping markets in which they operate today. it's a record. If you look at this chart, the far right-hand side is now. So over, and it's reached a level of 7.2. It is the highest level that confidence has been over the whole life of the survey. The previous high was actually in May 2008, and those you will recall what happened shortly thereafter. I'm not suggesting for one moment that we're going to repeat the GFC. Well, sincerely hope not. I think we've already had enough of that in the last 24 months or so. But as you can see, that there's been a considerable rebound from the low in this most recent cycle, which was at 5.1 in May 2020, which was at the peak of the COVID pandemic, and also the other low point over the life of the survey was reached in the early part of 2016. In fact, the lowest level ever was at 5.0, which was in February 2016. So that is really positive news, no doubt about it. And let's not forget about that. And I think that is reinforced by the next question we asked, which was a similar question to the previous one, again on a scale of 1 low to 10 high. How likely were you to make, or your business to make, a major investment or significant development in the next 12 months? Again, if you cast your eye to the far right-hand side, we have a record high in that regard as well. And that has recovered from a very low point, as you can see on the far right-hand side, again, which was seen in the early part of the COVID pandemic in May 2020. And it's just exceeded other peaks. For example, the one in the aftermath of the GFC, it's a level of 6.0 early in 2010. So that again is really positive news. And I think if we sort of reflect in the slightly bigger space, of course, what has been happening with, for example, ship new building this year to date, I believe is at a level, you know, in aggregate that we haven't seen since something like 2014, and obviously in significant contrast to the pattern of new buildings over the preceding 3 or 4 years, going back before 2021. And I have no doubt we're going to hear more about that later on from Trevor. So as always, I don't want to steal his thunder, or not too much anyway. The next area that we looked at was influencing factors. Here, we asked respondents to tell us about the factors that would most affect their shipping company. And this is a forward-looking assessment. And here are the results, which are presented on a weighted average output. And you can see that the top 3 are strongly led by demand trends at 31%, followed by competition at 19% and finance costs at 12%. What is noticeable this time then, and those top 3 are consistent over time, but what is noticeable this time round is the fact that tonnage supply has come up again. That was something that has a bit more of a cycle to it maybe, and I think it's reflective of that increase in the new buildings that I just referred to. And importantly, I think in the context of today's wider theme, regulation is pretty high up on the agenda. There was a time maybe 5 or 6 years ago when you looked at that and regulation would have been bottom of the list of factors, and it's certainly increased, and that has a whole raft of aspects for the industry, which I haven't got time to dwell on today, but I think that's where the environment and the emissions piece comes in here. The next area that I'm going to look at today is about costs. I'm not quite sure why I put costs before income, because if you don't have any revenue, then you're not going to be paying any bills. But anyway, that's how I'm doing it. Probably because I'm saving the best bit for the end. So this is both data extracted from the confidence survey itself and from other information that BDO prepares. The first question we asked was about finance costs. In 12 months' time, do you expect finance costs to be higher, lower, or the same as they are now? And the results are set out here. Again, the latest result is on the far right-hand side. And you can see that there's a net expectation at plus 23 of finance costs increasing. So, you know, in a way, that could be seen as a negative. I think it is not inconsistent with what one is seeing outside in the wider financial marketplace. But one always has to remember, I think, in the bigger picture, that it remains generally a low interest rate environment, and that has helped the industry enormously over the past decade and more. The next area of cost that I wanted to look at is about ship operating costs, which is the operating cost of ships, but not the bunker fuel. It's things like crewing, insurance, repairs, spares, that type of cost. For sure, operating costs are under control. And what is interesting to see with the latest benchmarking we've done, which the results for the calendar year 2020 have been published. And as you will see, reversing a trend over the previous 7 or 8 years of a decrease in operating costs. In 2020, operating costs increased. And I haven't got time to expand on all the detail there, but there's certainly an element relating to crew costs that was pushing costs upwards, not merely crew wages of themselves, but it was also crew travel and the such like, as you might imagine, in the midst of the pandemic. And also there was a noticeable hardening of costs in the insurance market, although not yet a significant uptick in overall daily rate paid for insurance, but there's certainly pressure there. And I believe that flows through in the indicators that we have from survey undertaken as to what the expectation of operating cost increases are for each of the calendar years 2021 and 22, which you'll see there at the bottom of the slide. But overall, I believe that operating costs in general remain under control, and that is a significant achievement by the industry in aggregate. It will be interesting to see with the expansion in the fleet coming forward, and particularly the need to source the relevant crew for the new vessels, and they're not always necessarily direct substitution for the existing tonnage on the water. That will be an interesting challenge for the industry overall, I believe. The final area of the survey I wanted to look at was about the freight markets. We asked respondents about likely movements in freight rates over the next 12 months. The question was, in 12 months' time, do you expect rates to be higher, lower, or the same as they are now? We asked this question separately for each of the main sectors across tankers, dry bulk, and container ships. And obviously, again, no doubt that Trevor will be talking more about this in a second, and it'll be interesting to see how what we have found in our survey sits alongside Trevor's analysis. I'm very much looking forward to hearing that. So the first area was in tankers. Again, the most recent assessment is on the far right-hand side, and you can see some positive news. That there's a strong positive sentiment within the tanker space. You have got to put that in the context of where the rates have been subsequent to the spike in the tanker markets in the early part of the COVID pandemic. but that feels quite positive to me. And then in the dry bulk sector, again, on the far right-hand side, a positive sentiment, but that sentiment has eased. And perhaps that sort of fits in a little with what I referenced earlier in my presentation regarding how the BDI has been evolving over time. And then the last about container ships. Now this is, as you'll see on the right-hand side, it's a negative expectation, but that has to be put in the context of where the freight rates in the container ship market have been, which they've been in the stratosphere fundamentally during the course of this year. So I think the expectation there is that that will not continue at the level it is going forward. But again, it will be interesting to hear Trevor's thoughts in that regard. But those are the expectations of freight rates going forward in the three main sectors of the industry. So to try and pull all these things together, I said there was time for some optimism, didn't I, in the industry? So there are reasons to be confident. If we look at the confidence levels, they've reached a record high. There's no doubt that people are making significant investments in the industry. And again, we're going to hear a little bit more about that in the port space as well in the concluding presentation today. Costs are controlled, as I said, even though there's an expectation of a rise in interest rates, it is coming off a very low base starting point. And there's no doubt that operating costs are under control. They have been increasing by a level below that of inflation more generally, though there is significant efficiency in the industry. And in the freight markets, certainly there's a positive sentiment in the tanker and the dry bulk space. And I don't regard an expectation of a reduction in container ship rates as being negative news of itself. It's just a reality of the marketplace, I think. But is there any reason to temper this confidence? There is no doubt that there are a lot of uncertainties. There was already a lot of uncertainty, and the past 2 years or so have only added to that uncertainty. But in my view, we should be doing a bit more of this at the moment, smiling. Of course, if you're behind a mask, it's not as easy to work out whether somebody's smiling, but I think we should be doing a bit more of that. However, we must not get carried away. So not too many fireworks. Maybe you can watch them virtually. But the reason I'm saying that is there's a lot of challenges ahead. The theme today is the green transition. The environment, decarbonisation has to be grasped. I think all of us await the outcome of this week's MEPC with great interest. But beyond that one topic, it's as well as the environment, it's the other two components of the ESG agenda that also have to be focused on. The S for social and the G for governance. All three of these have to remain at the fore for all businesses. So it's fundamental that businesses rethink their strategy. How is your business going to adapt and thrive in the future? Something I don't have all the answers to, but it's something that we can discuss. Gentlemen, ladies, that concludes my presentation, and now we have time for a few questions, hopefully.
Thank you very much, Richard. It's really useful and insightful. Thank you, and appreciate all of your signals for optimism and the positive sentiment. So thank you. Just while we're opening up the chat room for questions, is it possible to provide guidance for any interested companies who might be interested in taking part in Shipping Confidence Report, or is it possible to share any light on that?
Yes. I mean, and the results are available on our website, so that they're freely available. And if you're eligible, you can also sign up to participate in the confidence survey as well.
Great. So we have a question that Hans actually raised. On the face of increasing financing costs, how confident are we that the prolonged spell of low interest rates can be sustained? If the interest rates start to move up, what are the likely implications on investment confidence?
It's a very good question, Han. If I knew the answer to that, I probably wouldn't be sitting here today. But I think the answer to this, it isn't about perhaps overly focusing on the interest rates, because the interest rates are something that everybody has to deal with. It's not specific to our industry. The key thing is to prepare a business financial model that can be flexed to see what the impact on the business plan is of variability in interest rates. My sense is that that pressure in the interest rate environment, driven by inflationary pressure, will lead to some uptick in interest rates. But my sense is that it is where we're having to deal with an exceptionally difficult period for the global economy. And we've been on a little bit of a roller coaster ride over the last 2 years. And I think whilst that may cause an uptick coming forward into 2022, going out beyond that point, I think things will become calmer again and therefore more manageable. But the other thing that obviously any business can do, if it's prudent, is actually manage its interest rate exposure as well through something like interest rate derivatives or other product. So I think one has to apply good business practice in order to manage that exposure.
Thank you. There's a question here. What was behind the increase in regulation concern, please? Was it a fear of environment regulation?
That's a good question. I don't have any depth of analysis underneath that, but there is. I don't think fear of regulation. I think it's the reality that more regulation is coming in relation to decarbonisation and other environmental issues, and it is getting to grips with that presents a very big challenge. And I think one of the biggest challenge, if you're looking from a ship owner's perspective, is everybody perhaps is mostly focused on maybe 2050 as the key date, but the decisions you're making now as a business about investing in new ships need to have some degree of certainty underpinning them in terms of regulation, because those ships are going to last most of the way through to 2050. So I think that's the reality, and that uncertainty. It's the uncertainty around what's happening in regulation that, as it always does, that causes concern.
Thank you. Is there anything, Han, you want to come back on that, or the initial question at all? Or we have another question here lining up with regard to sort of regional growth expected.
No, I think we can go on to the next one, Helen. Yeah.
So, Gordon, obviously our annual review has been running for many years now, and one of our previous attendees asked whether, or has mentioned that last year we heard that much of the expected growth would be in the Far East. Are we still expecting that, or are there other areas as well where you expect to see growth?
I think overall the area of greatest growth will be in that wide Asian region. We also will see growth in Europe and growth in North America as well. And I believe that an area that we should retain focus on is that wider continent of Africa, where I do expect there to be growth as well, but often that is less predictable as to its pattern.
Thank you. And maybe just returning back to the issue of costs, is it surprising that fuel costs only make up about 4% of the factors influencing business performance after significant cost increases in the energy sector over the last few months?
That's good. It's a good question. I think not unduly. No, I think it, if you like, management of price volatility in bunker cost is something that the industry is well used to handling. And obviously it's been on a real roller coaster over the last 24 months, but the industry in general is used to dealing with that. That is, I think that's why it doesn't rank higher than that. It is a constituent part, but for example, you're much more concerned about have you got enough business to be getting on with through the demand side than you are, if that's right, then you can manage the fuel cost. If you didn't have the business in the first place, that's when you have a problem.
Right, that's great. Thank you very much, Richard.
You're most welcome.
And absolutely, thank you very much for your time. Over to you, Han.
Yeah, Richard, thank you very much. It was really interesting presentation to get us going. I think some of the things that came out of the survey probably were not so surprising, while others could be a little bit more surprising for some of the participants. But I think we can maybe revert back to some of those at the end of all three presentations. I think it will be appropriate for us to move on to Trevor now, who is going to drill down a little bit more on various areas in relation to the green transition scenario.
Okay, good morning, everybody. Thank you very much, Han, and also thank you, Richard, for your insightful presentation. For those of you who don't know me, my name is Trevor Crowe. Thank you for the introduction earlier, Han. I'm one of the directors of Clarksons Research, and my topic for today, as we have covered in recent years at this forum, has been to sort of review the shipping markets. I've given it the title Managing Disruption and Going Green, which doesn't quite capture everything, but I think I would reflect, and as we get into the subject matter, Richard reflects that we are in a position where shipping market participants are as confident as they have been for some time. I think shipping has managed the disruption quite well. We've had a huge amount of disruptions through the pandemic, and the shipping markets are, not all of them, but many of the main shipping markets are in excellent health. Second part, going green. Absolutely, whatever our position today and whatever the short-term outlook, the green transition and how stakeholders manage the transition and the impacts that it has on the shipping markets is going to be critical for our medium-term and long-term outlook. So I'm going to try and bring all that together. Like I say, it's almost impossible to cover everything in a short period of time, but that's going to be my focus for the presentation today. Just a quick word on Clarksons Research. For those of you who don't know us, we're part of the Clarksons Group, which you may know from our research activities, but also our shipbroking and financial services activities. Clarksons Research today is hopefully, we hope, the market leading provider of intelligence and data into the shipping and trade and offshore and energy spaces. We're also a market leader in providing asset valuations within the shipping markets, and also a whole range of different research services, consultancy, retainers, etc., bespoke data. We have about 150 people, and I've been working with the organisation, as Hans said, since the late 90s. So that's just a little plug for Clarksons Research. So let's get started on where things have got to with the shipping markets this year. I mean, it has actually been an extraordinary year. I'm not quite sure what's happened to a little bit of the graphics there, but bear with me. The rebound in economic activity and activity which impacts shipping has been very, very sharp indeed. So we've gone from a situation, you can see if you follow the global GDP figures, you'll all be aware that the world economy shrank last year and is going to grow by the best part of 6% this year. If you think about the physical shipping economy, having a look at that industrial production graph on the right-hand side, you'll see how sharp the bounce back was. Actual physical economy, world economic activity has bounced back very, very quickly. It was a short, sharp shock and a fast bounce back. A much sharper shock than the global financial crisis, but a much shorter period of time to bounce back. And that's important for shipping because shipping is all about the physical economy. The services side of the world economy was hit much harder by the pandemic and still is. And we all know if you're in the restaurant business or the hotel or business or something like the cruise shipping industry, things are a lot more difficult. But the speed of bounce back of generally of physical economic activity has been relatively sharp. And as a result, you've seen the shipping, or what I would call the cargo shipping industry, managing its disruption from the pandemic perhaps more quickly and more successfully than other parts of the world economy and also other parts of transportation. So if you have a look at the graph on the left, the sort of peak COVID impact on cargo shipping, we're tracking that by deep sea port calls, was about -10% back in May last year. The peak impact on passenger rail or passenger air or ferry port calls was much, much, much larger. And again, if you reflect on the graph on the right, the shipping, the cargo shipping line in terms of recovery got back onto parity with pre-COVID much more quickly. Some of the parts of transportation, if you're looking at cruise shipping, we're well aware. If you're looking at air for passengers, if you're looking at maybe the ferry business, those parts of the transportation industry are still somewhat behind where we were before. So the shipping has managed the disruption or be able to move through the disruption perhaps more effectively than other parts of the world economy and other parts of the transportation industry. If it's possible to have such a thing as a better COVID, I think I would argue that shipping has had it. The seaborne trade has bounced back in accordance with that. So we're tracking in Clarksons Research 12 billion tonnes of seaborne trade is where we're at for 2021. We've been doing this for decades, tracking the total volume of seaborne trade. It shrank by about 3.5% in 2020. But this year, seaborne trade is going to grow by close to 4%. You can see in the central graph how the peak impact was around Q2 last year. But by the time you got back into early 2021, rate of seaborne trade growth was back into positive year-on-year territory. I would argue that it varies, and reflecting on Richard's presentation, I would argue a little bit that this is quite variable across sector. If I was owner in some shipping sectors, I probably would be more confident. I think in other sectors, possibly less so. So we do need to remember that it varies. We do need to remember that a lot of this has been helped by about $17 trillion of global stimulus, which poses some questions for the future. But you can see on the graph on the right-hand side, markets like containers, the gas markets, grain shipping are well ahead of where they were in 2019. Some of the sectors are still behind, and oil and oil products is a really good example of that. Obviously hit by, for instance, transportation demand. So world oil supply and world oil demand are still somewhat behind where they were in 2019. And another way of looking at the same thing, the pace of recovery. Containers, gas, to a degree, dry bulk overall got back to pre-pandemic activity levels within 6 months or a year of the onset of the COVID pandemic. things like oil, passenger ferries, cruise in particular, obviously we're all aware, are some way behind and may take more than a couple of years to get back to those pre-COVID levels. The one thing I was astonished by Richard's presentation was how low down the rankings of impacting factors port congestion appeared. If you asked us as market analysts in Clarkson's research, and I fully accept that Richard's not responsible for the respondents' views, but absolutely we would say that whilst the bounce back in trade volumes and activity has been an incredibly important factor, the impact that has had on the shipping markets would not have been in any way as significant without disruption. And disruption takes many forms. I can talk about supply chains, we can talk about what goes on in land, we can talk about a lack of availability of containers if you're in that business. But the most obvious one is port congestion. And port congestion in particular, for me, has been a key factor in the performance of particularly the container shipping and dry bulk sectors. So we've got some interesting graphs there that show port congestion on the up. Let's just focus on one of them, the top right one. For the last 4 or 5 years pre-COVID, the amount of container ship capacity in port or in an anchorage associated to a port typically average 30-31%. Right now, that's at 37%. So a whole 6% more of the fleet is tied up in port at any one time. For bulk carriers, again, that's about 30%. It's up about 35-36 now. It's higher in China. Car carriers have seen the same thing. So certain sectors of shipping have seen really severe congestion. And when you've got fast bouncing back trade and tighter markets than you did have a year ago in terms of supply and demand, taking an extra 5 or 6% of the capacity out of the transportation flow because it's tied up in port has a very, very significant impact. So my message about the markets would be trade rebound and activity rebound plus disruption has got the markets to where they are today. And the third element of that story is that's all against an underlying manageable supply side. And that's perhaps where to reflect on Richard's survey is the supply side doesn't appear so prominent in people's worries, although maybe growing. Earlier in the year, the order book in shipping was at a 30-year low. You know, the fleet isn't growing very quickly. The fleet's only growing by 3% is about the growth rate we're going to get in gross tons in the world fleet this year. So, you know, we don't actually have any major supply issues right now. The supply side looks fairly moderate. I hesitate to use the word manageable, although it's on the slide. It's tough to manage if you can't get enough capacity to move your containers around the world. But it's a moderate supply side pressure on the industry. The order book has been building, though. If you're in gas or in particular container ships, the order book has been building. But the order book's still at record low in tankers, bulkers, some of the other sectors. So underlying fleet development fairly moderate. And the result of those three factors, moderate underlying supply growth, fast rebound in trade in many sectors, if not all, and significant disruption, what we call disruption in upside, has created a market environment which looks like this. Now, this is our Clarkson index, which we're very proud of. We publish it every Friday. And it's a weighted average of the earnings of tankers, bulk carriers, container ships, and gas carriers. And look at where the index is today. The index on what's the latest statistic we have here? 12th of November was about $35,000 a day. It peaked earlier, a few weeks earlier than that, above $40,000 a day. That's easily the strongest shipping markets since the financial crisis. So the last time that the Clarkson index was above $40,000 a day was back in spring 2008, and it also touched the same level in 2007. So these are the best shipping markets for 13 years. And, you know, not only the 2000s yet, but still, this is an extraordinary performance from an industry that was under a huge amount of pressure. If you only go back to Q2 2020, then it's a completely different environment, and these have been spectacular earnings in many sectors. I mean, containers, everybody follows this story. It's been so spectacular, fast rebound in volumes. We're 5 or 6% above where we were in 2019 already. This huge port congestion, lack of availability of boxes, and essentially a very manageable supply side. So I've been calling this the perfect storm, and you'll see that's filtered through to the media. This perfect storm driving extraordinary container markets. And as Richard said, you suddenly gone from paying $1,500 a box from Asia to Europe to maybe 5, 6, even if you believe some indicators, $10,000 to move a box from Asia to Europe or across the Pacific. Unbelievable levels of volatility, absolute spectacular performance. Similar at the second sector where we've really seen it be absolutely extraordinary is the bulk carriers. Okay, the BDI has come off a bit, and you can see the Capesize line on the middle graph, but essentially the bulk markets through probably Q2, Q3 and into Q4 this year have seen significant improvement, lots of congestion, a firm rebound in trade, and this has driven the bulk markets to, there's some volatility. The Capes have come off a bit recently. There was a lot of growth in the earnings for Panamaxes, Supramaxes, Handys earlier in the year, but overall robust gains and the best markets for 13 years. So we've got the all-time greatest container shipping markets, the best bulk shipping markets for 13 years. The tankers, much more subdued, but that will give you an idea of the kind of shipping markets we're in. So again, apologies for want to do the graphics here, but you see tanker earnings, as Richard was saying, tanker earnings still in the doldrums. We're in the worst tanker earnings period for 30 years, but container ship earnings have gone stratospheric. Bulker earnings have been very, very firm. LPG not quite so spectacular. LNG coming into a winter spike now. If you follow the press, you'll have seen LNG carriers are being fixed for over $200,000 a day. Car carrier earnings have picked up spectacularly, largely because of congestion, and even offshore, totally beleaguered in the energy market crisis that followed the onset of the COVID pandemic. Even offshore markets for rigs, support vessels are starting to pick up as well. On the asset prices, no surprise, you get stronger markets, asset prices start to pick up. There's been a lot more activity around shipbuilding. New building prices are substantially higher than they were at the start of the year. New building prices for ships, depends on the ship type, but maybe 25, 30, 35% bigger. Second-hand prices, again, if you're talking about bulkers or containers, huge increases in the asset values. I can tell you that last summer, you could have picked up an old Panamax container ship, say 10 to 15 years old, probably $6 or $7 million. If you have that ship now and sold it today, $65 million. So unbelievable levels of volatility and a huge upswing in the asset prices. And scrap prices have also benefited. Not that many scrap candidates, and also increasing steel prices as part of the commodity price surge. I mean, this all points towards some of the confidence factors that Richard were talking to. This is leading to people to transact. We've had more second-hand sales activity in 2021 in the shipping markets than we've ever seen before. This will be a record year. Q3 has not been quite as hot as Q1 or Q2, but this will be a record year for S&P activity. And you can see so far we're up to about 7% of the fleet changing hands so far this year. The record was 2007, sorry, 8%. It looks like we're going to surpass this. So even in terms of percentage of today's much bigger fleets, this will be a record year for S&P. And even though shipyard capacity is much reduced on where it was, say, a decade ago, we have a situation where investment in new buildings has picked up this year. We're not talking about the levels we had in the mid-2000s, but for instance, in 2016, we only had 800 new buildings ordered. In the year today so far, we've had 14 to 1,500, and that continues to move up. A lot of it's been in the containers, quite a bit in LNG, but overall ship investment in new ships, there's been an uptick too, but it is against a backdrop of consolidating shipyard capacity. I'm not going to go through the markets again in too much more detail, but just to give you an idea of the outlook, because I think given today's theme, the more important part here is to focus on the medium to longer term outlook. But the short term outlook is important and it is still positive, but it will vary across sectors. Remember what Richard's outlook by sector. I think if you're looking at bulkers or container ships and you're looking at 10-year highs or all-time highs in containers, you maybe would expect the markets will ease off at some point. But I would also argue that disruption looks unlikely to be resolved quickly. And as a result of that, I don't think the strong markets are going to disappear overnight. The supply side is quite encouraging. There is some build up in, say, the container ship order book, but that's not coming to 2023. So, I think, disruption is absolutely key here. And our expectation is that disruption does take a while to unwind. So although we might see some easing off away from record markets in tankers and in bulkers and containers, it could take a little bit of time to, fully sort of correct, if you like, from these spectacular highs. As I said, there's an encouraging supply side. There are other risks. At some point, there's a lot of, the stimulus has to be eased back. Bottlenecks will eventually ease. There is going to be pressure on world economic growth or bounce back at some point. There are risks out there, but I think we should expect that it will take some time for the disruption to unwind. On the flip side, for the markets that are weaker, is the tankers, like I said, the weakest market in 30 years. It is going to take some while for oil demand and oil supply to get back to levels where they were pre-COVID. So that could take a little bit of a while to correct back upwards, just in the same way that it will probably take a while for the bulkers and the containers to correct downwards. So even if you see some of the froth coming off the top in these spectacular markets that we have, we don't think we're going to be correcting all the way down to the bottom of the cycle quickly. We think that the actual short-term outlook through 2022 is quite positive, which perhaps ties in very nicely with the fact that many participants in the shipping market are as confident as they've been for some while. What lays beyond that, of course, is really, really exciting and interesting and critical for all stakeholders in the industry. I mean, when I think about this, I think about the mega trends, and we're going to focus on the top one today, most of all, the green transition. But when I talk to our clients and clients who have done well to manage the disruption from the COVID pandemic, the planning, post-COVID planning, which is the next thing the discussion focuses on, always focuses around green and tech. Green and tech. I think the evolution of trade going forward is also really important. But green and tech seem to be fully embedded in most stakeholders post-COVID planning, and I would argue that COVID actually accelerated that in both cases. So we're going to talk a lot about the green transition, but we all know what that is. I'm going to explain our framework for that. I think the technology is interesting, less an area that we're close to, but equipment on ships, impacts on trade, efficiency versus disruption, all key themes. And I would just reflect on trade scenarios. I mean, there's so much interesting stuff to talk about in trade, and I'm just going to stop and talk about that for one moment or two before we get stuck into the green transition. Seaborne trade today is about 40% larger than it was at the time of the global financial crisis. But you've got all of these trends, emerging markets, Richard mentioned Africa, all of the developing economies coming into the matrix. You've perhaps got new evolving segments. Keep on seeing people order carbon dioxide carriers. Well, we didn't have much seaborne trade in carbon dioxide before. Geopolitics, trade wars, protectionism, regionalization versus globalization, supply chain disruption, energy transition. 35% of seaborne trade is in fossil fuels. Reshoring, China economy maturing, Belt and Road. People wanting to de-risk supply chains, but somehow factory Asia is still incredibly powerful and resilient. All of these factors are important for our long-term view on seaborne trade. All I would say is, well, here's some scenarios and who really knows, but don't expect the 3 to 4% per annum growth we've had for the last 20 or 30 years. Perhaps a more realistic base case in our view is maybe more like 1.5 to 2% for the next decade, and possibly even a little bit slower than that, as shipping manages its way through this big transition with, the fossil fuels being gradually phased out of seaborne trade. There's some upside potential, but there's also a much lower case in which the decarbonisation comes much more quickly, in which it will be difficult for shipping to manage the longer term trade flow, because the phase out of the fossil fuel trades will come quickly. So the green transition. If you ask me what will be the most important factor, not just for the next decade, but probably for the two that follow, absolutely, I would answer immediately the green transition. And one of the things we've done at Clarkson's Research is to try and provide a framework for intelligence, updates, and understanding what the green transition means for maritime. And, you know, given our audience here today is maritime industries, you know, it's interesting to think about the split. The most obvious one to all of us in shipping day to day, I think, is the first one, the fueling transition. You know, run on a certain kind of fuel that emits a certain amount of carbon, and the whole of the world fleet has got to move to something greener and cleaner. Shipping is, I'm going to come back to this, but shipping is currently 2.4% of all of global CO2 emissions. So that's the fueling transition, and that's going to have all sorts of interesting things, and the regulatory part that Richard was talking about forms part of that. But there's also the energy transition. The global change in the energy mix is going to be important for shipping, because 5% of seaborne trade is fossil fuels. Over 40% of shipping capacity is involved in energy transportation. So that change in the energy mix is important. And thirdly, what I call the offshore transition, which is allied to the energy transition, but is important for maritime, particularly in the UK. 17% of the world's energy comes from offshore oil and gas. That will gradually reduce. It may not have peaked yet, but that will gradually see some downward pressure. But offshore wind and offshore renewables, in which the UK is one of the world leaders, if not the world leader, is growing very, very rapidly. So our offshore maritime businesses that are related to energy are going to pivot slowly, potentially, but they are going to pivot from oil and gas towards renewables. So that's a good framework for thinking about it. I'm going to mainly focus on the fueling transition, but just to think about the energy transition quickly, the energy mix and changes in the energy mix will impact on seaborne trade. They will impact on maritime. There are lots of different scenarios, and just like everybody else out there, we have these transition scenarios. I've put our two on the screen there. But either way, you've got to have a view that oil and gas, and in particular offshore oil and gas, their market share of energy will change. Fossil fuels will come under pressure. You've also got to have some views on offshore wind growing fast. Offshore wind today has a less than 1% share of global energy. But in our view, that could easily be 6 to 9% by 2050. It doesn't sound a lot, but it's huge growth rates to get there. I would also reflect the seaborne element of the energy mix may not follow exactly the same trends as the energy mix itself. Seaborne elements might have a little bit more growth in them. You know, oil production globally might peak a little bit earlier than seaborne oil trade, depending where the demand and the supply is. Coal, again, coal production could already be, you know, world coal use probably already is declining, may have already peaked. But the seaborne element may have a little bit more legs in it. Maybe some of the trades that are driving the seaborne coal trade aren't quite as immediately affected as something like domestic coal-fired energy production in the US or China, for instance. LNG, as we're talking about gas, you know, the LNG trade is growing more quickly than the pipeline trade in gas, for instance. So there may be trends in the actual seaborne part of energy which mean that it has a little bit more legs than the roles of the fossil fuels in the actual energy mix itself. But the fueling transition is perhaps the most interesting and exciting, and the one where a lot of our attention is focused, where we can actually say some more specific and material things. As I said, we think by our statistics, international shipping accounts for 2.4% of global carbon dioxide. Transportation is 25% of world CO2. And shipping is around 10% of that. So it comes out at 2.4%. That's about 850 million tons of CO2 per year. The good news is that's down from over 1 billion back in the late 2000s. But the difficult news is there's a long way to go to reach output targets of 50% reduction by 2050, or even net zero is a long, long way to go. And there's huge amounts to do. I would, however, reflect to the benefit of shipping that per ton mile of cargo, that's 3 times cleaner than rail and 9 times cleaner than road. But there's plenty to do, and tracking this is going to be important. And our view is that, you know, just like everybody knows today, the things like the speed of a ship or the size of a ship or what a ship earns, I think people are going to want to know the carbon footprint of ships pretty quickly. I think it will become an essential fact, knowing what the CO2 per day output of any ship in the fleet is. You know, right now, I can tell you for a sort of 2010 built Capesize, it's about 100 tons of CO2 per day on average across a year of trading. For a VLCC, it's about 175. For an eco VLCC, probably 30 to 40% less than that. Knowing these footprints, I think, is going to become really important for the industry, and understanding exactly what the emissions of ships are is going to be just as important as knowing what they earn or where they're trading. Also, then, we'll need to be tracking the uptake of green technology. Every day we read in the news, of course, that this has been fitted to this group of ships, or such and such an owner is going to be investing in this type of technology. Tracking this is also going to be important. We've put huge efforts into this at Clarkson's Research. I can tell you right now that 34% of today's order book by tonnage, when it's delivered, will be alternative fuel capable. I'm not saying we necessarily will use alternative fuels when it's delivered, but will be alternative fuel capable of some type, largely LNG, but we've also got LPG capable ships on order. We've got methanol capable ships on order, etc. 26% of the order book's going to come with a scrubber. Roughly 25% of the fleet by tonnage already is fitted with a scrubber. Over 4,000 ships in the fleet are fitted with some kind of energy saving technology. I could go on and on, talk about ballast water, high voltage shore connection, etc. I would also reflect we need to be tracking the facilities at the ports. We've got 141 ports on our database with an LNG bunkering facility of some kind, another 95 under development. Tracking the uptake is going to be really, really important. And this does relate back to Richard's point about the uncertainty. To make these investment decisions, are you going to invest in an LNG fueled ship? The uncertainty around the pathways and regulation is a difficult issue here. Here we have some statistics on the uptake. I mean, obviously, we've got a lot of LNG carriers that can run on boil-off gas, but you can start to see, particularly on the order book on the right-hand side, how LNG-capable ships have started to gain traction in the mainstream shipping sectors, how LPG as a fuel is gaining traction in the LPG carriers. And when you get into the more niche shipping sectors, you see some of the other solutions like batteries and stuff coming through. So tracking the uptake of alternative fuels, like I say, by tonnage, it's about 35% of the vessels on order today. But I'm going to come back to my point also about regulation, because once you're tracking the uptake, you've also got to track the regulations. And the shipping markets, to a degree, have become a little bit obsessed about this, and rightly so. The regulation timeline has accelerated immensely, and you can't understand the impacts of the green transition without factoring this in. This has been a trend that's been going on for some while. I've put up charts like this now for a number of years, discussing the accelerating environmental and regulatory timeline. We haven't got time today to go through them all. The big long-term targets, I think, are probably the most interesting. But of course, a huge amount of attention goes on to the regulations du jour. The biggest short-term regulations, the IMO short-term measures, the EEXI, the CII. I'm not going to go into detail, but understanding whether vessels are likely to be EEXI compliant when that regulation comes in 2023, we think probably the EEXI is largely manageable. Most of the tankers and bulkers and probably all of the container ships are the majority theoretically compliant. Maybe little bits of work to do for some of the others. Maybe they'll need to slow down a bit further, fit some energy saving technologies. Maybe one or two older vessels will get scrapped. The EEXI, is comparing to a baseline of a 2000 ship. So, ships have got more efficient. 30-something% of the fleet is an eco ship these days. Ships have slowed down. So maybe not quite such a challenge, although important nonetheless. But everybody's thinking about the CII now, which also comes in 2023. That compares to a baseline of a 2019 ship, which is a lot more challenging. If you think about the average of the fleet in 2019, by which time a third of the vessels in the world or a third of the tonnage in the world was already eco, that's a lot more challenging. And understanding how vessels are going to be ranked on the CII is going to be important. And what charterers think of vessels that may fall the wrong side of the line and the D&E ratings will be a really interesting question. This looks to us a bit more challenging for the vessels and the fleet as it stands today than the EEXI. There are plenty of others. There's the European Emissions Trading Scheme I could talk about, and many other regulations besides. But what I would reflect in terms of our outlook for the shipping markets, and this is why this is so important, this is a little bit why I've glossed over what is essentially a confident and positive outlook for the next few years, is this stuff will have a huge impact on the markets beyond that. we are already seeing tiered markets, eco ships earning more than non-eco ships, younger ships earning differential from older ships. Markets will get more tiered, markets will become more complex, and understanding that is going to be really important. And for those of us analyst types who obsess every day about supply and demand, these will have big impacts on supply demand. Lower speeds, increased demolition, and the pace of fleet renewal will be uneven. Don't worry too much if seaborne trade isn't going to grow, because maybe the fleet at some points will be shrinking. The supply-demand balance is going to be heavily impacted by this green transition. The last piece really is how to get to a potential solution. Look, everybody's got scenarios. We found one that worked, and you need to pull a lot of levers. Changing perhaps the average haul of trade might help a little bit. Further drops in speed might help a little bit. Fitting energy-saving technology to vessels might help a little bit. And in our scenario on the screen, the last leap forward is done by changing the fuel mix of the fleet. And if you did all of those four things, and in our scenario, you end up with 30% of the fleet being LNG in 2050, about a third being zero carbon, the oil fuel portion of the fleet being around 20%, and other low carbon fuels being about 15%. That scenario would get you to the IMO 2050 50% reduction in CO2 emissions. I would reflect that every scenario we've run, the fourth one is the most important. If you don't get the change in the fleet mix, you will never get to the targets. I'd also reflect the new building investment required to do this transition is closing in on $4 trillion. Massive investment required. I would also reflect that everybody wants to go faster now, right? So Richard alluded to the MEPC meeting. Let's see what happens. But the EU wants to go faster than the IMO. The US wants to go faster than the IMO. Will it be a 50% reduction in CO2 we're aiming for? Soon it may change. This is part of that difficulty about the uncertainty with technology and the uncertainty with the regulations. I've got three other reflections on the green transition before I close on our shipping market review, please. I think there are three aspects that are really useful to think about. One is what I call the feedback loop. And this is a little bit kind of, it's something that analysts really enjoy thinking about these things. But, I have spoken that we may expect slower demand growth in shipping because of the green transition. But the faster the slowdown in trade is, that probably is coming with a faster decarbonisation, which means you're getting a faster renewal of the fleet. So, or if you've got a fast renewal of the fleet, that's probably coming with slower trade growth. If trade grows faster, that's good news, but you're probably getting a slightly slower fleet renewal. So these two things do balance each out a little bit, do balance each other out. We might expect a slightly slower trade growth going forward because of the green transition, but that will bring with it a faster demand for new vessels and leave us times in the future where we're going to be potentially short of ships if the renewal of the fleet is uneven. So there is a little bit of a feedback loop here. I mean, think of it from a shipbuilder's point of view. They're fantastic. We're going to need to renew the whole of the fleet. But equally, that might come with slower trade growth. You can see it from both sides, but just reflect there is a bit of a feedback loop there, and there will be a little bit of a balance and a trade-off between the pace of demand growth and the pace of fleet renewal. I'd also reflect on financing. Richard spoke a little bit about this, and I think there's maybe one or two things to think about. As well as the interest rate question, there's also the fact that lenders and other forms of finance, whether that be the capital markets, for example, or bonds, whatever, are going to need also to decarbonise their portfolios. So, there's not only going to be interesting pressures on the price of finance, but there's also going to be a pressure on the availability of finance, because lenders are definitely going to need to decarbonise their portfolios. We have the Poseidon principles in shipping, which I'm not going to go into detail here, but we're all aware that there is a tracking of the greenhouse gas output of lenders' portfolios, but just generally across finance, there's pressures towards decarbonisation of portfolios. There may be areas where finance gets a lot more expensive. If you've got a great green project, maybe you'll be able to get something more competitive. So funding the transition is also going to be critical. And last of all, after all, this is partly Ports and Terminals Group, so I should say something about infrastructure and ports, although my brief is to discuss the shipping markets. It's not only just about financing and executing the renewal of the fleet and the transition to lower carbon shipping on the ships themselves. The ports and infrastructure is hugely important here as well. So there is, the requirements for the green transition for the shipping industry isn't necessarily just about the ships. There are going to be huge pressure to execute and finance development of eco facilities across the world of infrastructure. In ports, we already see this accelerating. We track about 5,800 ports globally on our database. 7% of them today have got some kind of eco facility. Could be LNG bunkering, could be cold ironing, onshore power, could be ballast water discharge, carbon capture, sulfur reception facilities, whatever it is, we're tracking it. But 7% of the world's ports have that today by number. Now, okay, it's focused more heavily at the bigger rather than the smaller ports. So the 7% isn't the best indicator there. But at one point in the future, that's got to be 100%. At some point in the future, that will have to be 100%. And all ports in the world will need investment in eco facilities to help manage and facilitate the green transition. So whilst I've talked mostly about the shipping markets and also about ships, the financing of the transition and also the infrastructure requirements of the transition, I think are very, very important factors as well. So at this point, I think I should probably conclude to take a bit of Q&A. The key market issues, big recovery in the shipping markets, healthy economic recovery, particularly in the physical economy, lots of returning volumes, but disruption upside from port congestion, supply chain disruption, etc. Clarksey Index going very, very well, 13-year highs, but it is a bit uneven. Some sectors doing better than others. Immediate outlook positive, not too much. There are risks, but certainly not too much pressure from the supply side yet. Ordering picking up, asset investment picking up, record S&P activity. That's all plenty healthy market activity. Looking forward, all of the planning in our industry is focused on green and tech, or a lot of it. The energy transition, super important, understanding all the drivers there, not just the fossil fuels piece, but also things like globalization versus regionalization, also things like Chinese maturing economy, etc. But at the heart of the green transition, the energy reductions, emissions reductions, technology and regulation uncertainty, potential limits to supply. If ships have to slow down to meet emissions regulations, that's going to cut the supply of shipping. Huge increases in new building investment required to meet the transition. I've written 1 trillion here by 2030. I also told you that our sums get us to almost 4 trillion by 2050. And that's going to generate major financing requirements too. And as I said, also huge infrastructure requirements for the shipping industry as part of the green transition. So I'll leave it there, but I'm certainly happy to take any questions before we move to the next session.
Thank you very much, Trevor. That was really hugely insightful and some gold-plated content there in terms of sort of helping stakeholders frame their decisions for the green transition. And I really appreciate the context that you provided to, everything that's gone behind this, the market conditions and the unprecedented period in shipping. So thank you. Thank you very much. Would you agree, Han?
Yes, certainly. Yeah, there's a lot of detail and content there, a lot of options. Yeah, indeed.
We have some questions on via the chat room. We have one that goes back to sort of maybe expanding on the order book side of things, Trevor. How much of the order book depression is due to uncertainty around the solution to carbon reduction technology?
Yes, I think that's a very good point. I would say it's a mix. The order book has partially been held back by COVID impacts, short-term uncertainty about the markets. So I think you'd probably find if you went back to pre-COVID, ordering was just starting to pick up a little bit. You're getting a little bit ahead of steam. And some of the slowdown in ordering because of COVID has been because of short-term uncertainty over markets. You can see the market sectors where people are most confident, like containers or LNG, are where the ordering has come from that's helped it pick up this year. But from a slightly wider perspective, Absolutely. Over the last 4 or 5 years as a whole, 100% that's correct. The uncertainty, and Richard alluded to this as well, the uncertainty over technology, vessel technology, and what to order has definitely held back ordering. And I think you have to have a lot of sympathy for the ship owning community in this area, because again, Richard alluded to it, you know, if your technology, you're just about to pull the trigger on a $100 million investment or more, and you don't know whether to go for LNG fuel technology or something else, you know, that's a really tough decision. And the sands continue to shift, the regulation, technology continues to improve, fuel technology is changing. So yeah, absolutely. I would say short-term factors have had an impact, but as far as long-term factors on ordering go, uncertainty around vessel technology is at the top of the list.
Thank you. Thank you. Just a question with regard to the tanker specific market on a mid to long run 2030, 2050 period. Is it likely that demand for crude oil and dirty products will significantly go down together with freight rates for VLCC, LR3 and LR2 tankers, while the demand for LNG carriers, as the LNG is the cleanest possible fossil fuel, and LNG bunkering vessels will grow rapidly, and that tonnage will grow significantly by mid-2030?
Yeah, I think there's quite a lot to say there. I mean, yes, if we're talking about the long-term outlook, I think you've got to separate out volumes versus markets. First of all, the thing there is on volumes, absolutely. Once you get, I can't tell you when seaborne oil trade will peak, but could be 2030, could be 2035, could be 2025. But at some point, seaborne crude oil trade and oil products trade will peak. It's very likely that seaborne gas trade gas is 30% cleaner than oil, a lot cleaner than coal, and probably gas acts in the energy transition as a kind of bridging fuel to a cleaner future. Absolutely, at some point in the long term, oil trade will start to peak and then recede, and seaborne gas trade may still be growing. But don't necessarily conflate that with stronger or weaker markets, because of course the supply side is going to change as well, and the unevenness of fleet renewal. I mean, for the longer term, the oil tanker market will probably shrink in size in terms of trade volumes. But of course, there may well be periods of time where the fleet is not being renewed in an even fashion. And I absolutely agree with Richard. Volatility, the green transition is going to continue to drive volatile markets. I think the markets of the 2020s, 30s will be more volatile than what we've seen before, because the renewal of the fleet will probably be uneven, and that may lead to market spikes and short-term shortages in tonnage that do create spiky market conditions. So definitely there'll be this sort of volume switch where eventually seaborne oil trade does peak out, but don't necessarily expect that means that earnings have to necessarily be low. LNG bunkering, absolutely. I mean, right now, if you actually really want to go and order alternative fuel ship, it's the pros and cons to them all. There's no clear winner. Things are changing all the time, but right now the one that has got traction is LNG. And I certainly, when I run these scenarios, and the team at Clarkson's Research, you can construct scenarios where you kind of jump LNG and move on to the next things, but you can't really order them right now in huge volumes. So most people's scenarios, including our own, do have a role for LNG at the very least as a bridging fuel. And there's also an argument that LNG is a kind of gateway into, I don't want to get too technical, but synthetic LNG, bio LNG, which are zero carbon versions of the LNG that we know today. So yeah, I think LNG bunkering absolutely a key part of the infrastructure transition.
Thank you. Okay, we've got time for one more question, I think. And just touching on autonomous shipping, and your view on whether it poses any disruptive threat at all, maybe to short sea.
Yeah, I have to say, being at the commercial end rather than the operational end, I don't particularly have any strong views on autonomous shipping. Particularly, I do think it's probably a slightly broader umbrella than people imagine. I mean, what is autonomous? What is semi-autonomous? You know, is it zero crew? I noticed that autonomous container ship made its first voyage of the Yarra project the other day. But I would agree with the disruptive threat, which is perhaps more where I would give my views. I feel that all of these different technologies are going to bring disruption at different times, and whatever, I apologise for not having a strong view on autonomous shipping, but I really don't. But wherever you are in shipping and the maritime universe, whether it's autonomous ships or other forms of vessel technology and vessel equipment, this is all further disruption that's got to be managed. Short sea, coastal, you can see the solutions there being different. There is a big difference between applying a certain solution to deep sea, VLCCs going from the AG to China, or container ships going across the Trans-Pacific. You can see the basket of solutions for local and short sea and coastal shipping potentially being different. So absolutely, I think every part of shipping will be, again, managing disruption and going green. There you go. So I would agree that all of these things, I wouldn't necessarily say it's a threat, but it is certainly disruption.
Thank you very much, Trevor. I really appreciate that.
Thank you, Trevor. I think it was really good, and it's clear that there are many options available to different stakeholders in the industry as we stand, whether those are stakeholders such as ship owners or ports who are looking to sort of renew their assets or look at new investment, or indeed the technology providers who might bring in the solutions to succeed in the future. But there's a lot to consider there indeed. I think we are now in a position to move to our last speaker, and Ian is going to perhaps pull it all together from almost giving a reality check, if you like, from a port's point of view in terms of the decisions and the dilemmas that they face. Ian, over to you.
Thank you very much. Thanks also to Trevor and Richard for their excellent presentations. Now, my presentation is going to come down from the macro, the whole market overview, very much to a micro presentation, or specifically for Portsmouth International Port. But I think I also speak for many of the other ports in the UK. And hopefully that will be of interest to you all. So first of all, I'm going to tell you a little bit about Portsmouth International Port. I'll perhaps start off there by obviously qualifying that ports are rather important to world trade. 95% of the trade in and out of the UK comes by sea. I'm sure I'm teaching you all to suck eggs there. That's something that most of you will be aware of. Like the ports on the continent, the big ports like Rotterdam, Antwerp, Hamburg, Portsmouth is a municipal port. One of the most important things to bear in mind there is that every year what most ports would call profit, we call surplus, £8 million goes direct to the council's purse for spending on city infrastructure, etc. Portsmouth's the largest cross-channel, the second largest cross-channel port, and has the most routes to Europe in the UK, which is relatively significant. Very fast vessels, mostly modern, and we'll touch on that a little bit later in the presentation, where that's significant. We're classified as a major EU port. A major port for the UK, which is sort of relatively important. The number of passengers that pass through and the relative volume of goods. And we're currently investing in an ambitious transformation plan, which will result in £30 million being spent. Some of these on green initiatives, more of them on the actual commercial aspirations. And to help us do this, we engage with Royal Haskoning late last year. I think there's some Royal Haskoning people on this conference. And we have been developing our master plan. The main point of that master plan really was to have a look at our commercial ambitions and try and balance them off with our environmental ambitions as well. And we'll touch on some of this as we go forward. And we're also part of the Solent Freeport which is again one of the latest developments in UK ports. I won't go into that in too much detail, but some of you, I'm sure, will be working on projects to do with free ports throughout the UK. So the other part of Portsmouth International Port is our general cargo terminal. I do apologise for being Portsmouth specific here, but it is a chance to advertise the port, so I'll take my opportunity there. Portico is the port's general cargo terminal. It employs 150 people, stevedores and management. It's also owned by the council. It's a standalone business owned by the council, not quite the same as the municipal port, but it all goes into the same sort of shareholding. There are 2 commercial quays that are very, very close to the motorway. One of the points I wanted to make on this slide is the quays are very useful. As you can see, you've got 3 very large vessels there. The Virgin Cruises vessel is actually on the cruise and ferry terminal, but you have the Vestas Windblade vessel there, which is quite a big vessel, and also a relatively large bulk carrier in shot. So they're useful berths. The land that we have with them isn't particularly significant. It's not a big load of land, and you can also see a lot of solar panels on roofs, which again we'll pick up on this a bit further on in the presentation. And at the moment that terminal is going through a transition from being what was specifically once a fresh produce terminal into a terminal that is going to handle many goods. We've recognised that we need to diversify in order to survive. And we've also, picking up on some of the stuff that Trevor was talking about, we've also been helping a little bit to resolve the current port congestion and container crisis, which is pretty specific in the UK to the container vessel business. So we've had a few vessels come into us where we've handled and repatriated some empty containers. Anyway, you'll be pleased to know that's the end of the presentation specifically about Portsmouth Port. And there you can see the port in its full glory. Just before I go on to the next bit. Excuse me. And really, we're going to move on to the more the relevant and probably most important bit, the transition that we need to look at doing to go into the sort of low emissions and then eventually into the carbon-free energy world. So I'm going to break this section down into sort of 3 areas, really. I'm going to talk about what's achievable now and what's actually taking place, and we'll go through that in a second with this specific slide. Then I'm going to talk about what is achievable with a little bit of help, and that will all make a little bit more sense as I go into it. And then we'll be talking about what's achievable but where we're going to need an awful lot of help. And then I'm going to leave you all with a sort of cliffhanger. Now, I'm hoping that most of the people on this conference are of an engineering and consultancy background, because the ports industry is going to need some help thinking its way through this and potentially lobbying for things and understanding where it is that we're going. So first of all, I'll talk about some of the things that we've been doing when it comes to the lower carbon and the lower emissions efforts. Specifically at Portsmouth, our big harbour mobile cranes, which are powered by diesel, they're now operating using a fuel brought to us by Shell called GTL, which has had some very clever chemists working on it in order to reduce the amount of emissions, so that the sulfates and nitrates that are produced by diesel engines, not only does this all go through the exhaust on the crane, but it's a specific fuel that we're using. So that's just to reduce emissions. It doesn't reduce carbon, obviously, but it reduces the emissions. We've also got a fleet now of Euro 6 buses operated at the port. We'd very much like those buses to be electric buses. Those buses are used to take passengers to their ships from our terminal that we have at the port. And if they existed, we'd have bought electric buses there, but they're not actually available at the moment. And then the sort of the final part of the low carbon aspect is the fact that some of our customers now, in particular Brittany Ferries, are operating with LNG ferries. So they've got two pure LNG ferries about to come into operation, and then they've also got another two vessels that will be a combination of LNG, and they will be electric or hybrid operation when they're manoeuvring in port. And again, this is important. We go on to some of the other things that I wanted to talk about. Other things that we've done over the last few years, so that the actual passenger terminal that we have was built in 2011. It has a seawater heat pump system to keep it warm. Has very clever electric air vents on the top of the roof for when it gets hot to help cool, which don't work like air conditioning. That they sort of encourage a throughput of air. We also have seawater flushing, which is not really part of the energy agenda, but it does help to save using valuable fresh water. It's seawater used to flush the toilets throughout the terminal. We also have a significant amount of solar panels throughout the port. So obviously those solar panels are there to generate electricity, and we've just recently invested in something called a PESO dual chemistry energy storage system, which I'm told by our port engineer is effectively battery storage for this PV, which again is very important, and we'll touch on that a little bit as we go forward onto the next stage. As you saw from the previous slide, there's a lot of solar panels going up all over the port. We're also assisted by the city's energy department. They have various grants which allow them to invest in solar panels to provide to basically pump electricity back into the grid, and also to be used at source. So we've taken advantage of that. We're doing all sorts of other stuff in order to monitor air quality throughout the port as well. So we have air quality sensors in place, and just that. And finally, when it comes to research and development, we're also sponsoring a hydrogen generation research and development project, which is effectively the universities of Portsmouth and Brighton trying to build a hydrogen-powered launch for use within the port, which is quite an important project going forward because of work I think that's being done by the shipping industry to look at alternative ways of powering vessels that aren't going to be reliant on carbon-based fuels. And finally, just as a segue into the next slide, which is talking about what's achievable with a little bit of help, we're looking at wind energy. Now, one of the aspects of wind energy in the UK at the moment is a lot of emphasis has been made on offshore wind energy. You'd all be aware of the large-scale wind farms offshore up on the Humber, south coast in the Irish Sea. Because of the government's emphasis on offshore wind, it's quite difficult to get permission to put onshore wind power at ports. So some ports, Bristol, Liverpool, that have, and I think one of the main reasons they have been able to get wind power on their port is because they're away perhaps from developed areas, built up areas. We're not quite as lucky as that at Portsmouth, although we are at the bottom of the motorway, and when on the entrance to the city, we're still quite close to residences. And in this day and age, when we're looking to effectively get power to the port in order to operate the machinery and to reduce our carbon footprint, perhaps we should be thinking a little bit more carefully about where wind power is relevant or not. We're sat here, some of us are sat here in London today, and I'm pretty sure that some of the buildings right in the middle of London, top of some of the biggest buildings, there's wind power generation. And one of the things that's restricting us at the moment is the fact that the actual city planners that are part of the same organisation that I work for, being a municipal port, Portsmouth City Council, they currently are not allowing onshore wind to be constructed. So there's a little bit of a work to do there. And then we go on to some of the other aspects of port operations. So within the port now, we've replaced all of our engineering vehicles with EVs. So we've got small vans, electrically operated. We obviously looked at the buses, but at the moment, nobody makes a bus that's got either got a battery on it that doesn't make it either too low or too high to be used for the applications that we need. And also large cargo equipment handlers. So your reach stackers, your shunting vehicles in the yard, large forklifts. Because of the scale of power that they need to achieve, at the moment, it's not possible to do that economically with electrical power. I mean, for instance, if you're looking at building a truck, say, to replace a grain lorry, you can't, to build a battery big enough to give it the range that it needs to carry the load that it needs, it almost needs to be as heavy as the lorry is when it's got its gross load on. So there's a lot of development that needs to be done there. But we're confident that our suppliers, those that build these reach stackers, those that build the truck units, working in the industry, the transport industry as it is at the moment on the land, they will eventually be able to evolve what they're doing into electrically powered vehicles. And it's a competitive market, so they're all racing to the top there. So we're confident that within the next few years, we will be able to afford to buy that sort of cargo handling equipment. The other thing is the cranes that we have on site, they're all, as I said earlier, they're all powered by diesel. Really and truly, a bit like they were in the 50s, actually. We need to look at converting them so they work on electric again. We're kind of going around in a circle when it comes to what's happening at the ports industry. And the challenge there is that the port's already quite high on its electrical demand. And if you're trying to operate 5 harbour mobile cranes all at the same time, you need significantly more electric. So we're already working with our local electricity supplier to see how we can achieve that. And that helps sort of focus in really. If you look at the top slide, top part of this slide, there are 2 goals that we're trying to reach, 2 ambitions that we're trying to reach. So we're looking to become a net carbon neutral port by 2030, which on the face of it, looking at the levels of solar that we have throughout the port, looking at the fact that we're converting a lot of our equipment to operate by electric, I think we've got a good chance of being at that carbon neutral position from the point of view of the port by 2030. But when you're operating at a port, you're also scrutinised for the emissions that the port produces per se into the local environment. And what I kind of mean there is that the ships that visit then become part of the port's problem, which I think Trevor made it relatively clear in his presentation that the ships that come to the port, they're not operated by the port, they're operated by third parties. And whilst we can ask them nicely to come into the port and not emit the carbon and various emissions into the atmosphere, that they will do until the technology has caught up and they can develop their vessels themselves. And that's the target that we have by 2050. What we really want to be seeing by 2050 is that all of those using the port are zero carbon, zero emissions. And that's the challenge. And then that's going to bring me basically onto my last slide. And that last slide is all about what is achievable, but something that we're going to need a lot of help for. Now, this is very Portsmouth specific, so I'm bringing our own experiences into this, but I'm pretty sure that if you spoke to every single port in the UK and in the rest of the world. This is one of the big challenges going forward, and it's going to kind of be the cliffhanger that I'm going to leave you all with to consider when I finish this presentation. So the overarching challenge is getting enough electric to the port in order to potentially provide a facility for vessels to plug into when they come alongside. Now, looking at the fleet of vessels that calls with us today, Brittany Ferries, as I said, are going to have these hybrid vessels in a few years' time, and they'll each need a 5 megawatt supply to recharge their batteries for their port manoeuvring. We've been very successful this year in attracting Virgin Voyages. We're hoping that they're going to base their full vessel, I think it is, with us in 2024. That's going to need a 10 megawatt supply from the quayside. And remember the ferry berths, we've got 4 berth solutions for them. So there's going to need a 5 megawatt supply on each of these berths, and each of those berths could actually have a ferry in at the same time. So one of the challenges is how do we sort of flatten that peak? We're going to have a very inconsistent peaks and troughs demand for shore power. The other thing is our engineers and some of the consultants that we've engaged with are estimating that overall it's going to cost at least £10 million per quay to provide this power. Now, at the moment, even if we put the substations in and we put the connectors in, and some of those connectors is nothing necessarily uniform in the shipping world at the moment, even if we put all of that equipment in, and it's going to cost around about £10 million per quay to do that, we've also got to work with the local power grid, the part of the grid, the power suppliers, in order for them to be able to provide that power to the port. And at the moment, that's simply just not there. So there's a lot of political discussions to be had. There's going to have to be a lot of lobbying by local councillors, local politicians to see how that we're going to be able to procure that power, see who they can influence in order to be able to get that power delivered to the port. And then once we've spent all that money, bearing in mind £10 million a quay, 7 quays, so that could be £70 million, which from the point of view of a ship operator probably isn't very much. But there's quite a few ports across the UK all looking to spend that sort of money. And then you have to ask yourselves, what happens when the world's fleet does what starts looking into the sort of stuff that Trevor was talking about, looking at the options that they've got to power their vessels? If they all choose a method of propulsion, an engine for their ships that simply emits steam, like I think an ammonia engine, I understand would just effectively its main exhaust product would be steam. If that happens, there's going to be no need for them to plug in when they come alongside at the port. And when that happens, that whole £70 million investment may well be wasted. So there's a lot of discussions, a lot of thinking that we're going to have to do, working unilaterally and also with our ship owning partners to work out exactly how we manage the port infrastructure. So that's the challenge I'm leaving your industry and the SMI. How do we go about preparing the ports for the future, and what's going to be the best way forward? Thank you.
Thank you very much, Ian. Really appreciate that, and the level of detail that you've gone to in terms of your own stakeholder ambitions in terms of reaching zero emissions and the amount of work that you can dedicate to that, and really the theme of it can only be done going forward from a collaborative point of view is really clear. So thank you very much. We have a question from our attendees. One of them is saying a great story from Pompey. Will Freeport status enable some of the unlocking needed to overcome some of the planning challenges mentioned, and maybe enable access to finance for the cost of zero carbon?
Bill, yeah, we would hope so, albeit none of this is particularly clear at the moment because some of the Freeport policies following on from the actual documents that were provided at the bid stage. But in theory, one of the reasons for qualifying for the Freeport initiative is that you are planning to bring in all these green initiatives, and so we've had to show that throughout our bid what we're looking at investing in. So a lot of the stuff that I've just described is kind of key for us to get that Freeport status. So in theory, a lot of the potential advantage of becoming a free port, maybe the increased commercial activity will help us get to this stage quicker. But actually, it was what the ports in the region were saying they were looking to do that got us the free port, has got the free port bid to where it is at the moment, rather than the government offering money for being a free port towards your green initiatives. So hopefully that answers your question.
Thanks, Ian. Hannah, I'm wondering whether we should pose, the challenge that Ian has placed to industry to the rest of the panel. Maybe go to panel sessions of questions now that we've got sort of 10 minutes left.
We probably can. I had a very quick one. Given that Ian, you're obviously a council managed port, I was wondering whether you could somehow use a leverage that if you were to be given the opportunity to actually to be able to generate green energy, if you like, they might be interested that if you're generating more than your own needs, you may be able to sell it back to the council or other stakeholders, if you like. I wonder if that could be a leverage for you to be able to use to get some of what you want.
So Han, that's actually happening. That's part of what we're doing today. One of the reasons why we've been able to use a grant that was received by the city to increase its basically PV coverage, what we've done, because the city owned the port, they've decided to put those panels up on a lot of the buildings in the port. We all know that ports tend to have big buildings. We're just about in the spring to build a covering, a bit like they do in the hot parts of the continent for car parks at supermarkets. We're going to have a covering for all of the ferry passengers to be able to park under in the queuing lanes that will be covered with solar PV. And the idea there is a significant amount of that solar PV will be spilled back into the grid. It doesn't go direct to the city because it's not quite where we've got to at the moment. There's no private wire that provides the power back into the city, but it will spill into the grid. And of course, some of it we will be collecting in these batteries in order to potentially provide power to the port when it's dark, because of course solar's not much good unless the sun's out. And also we're engaging with one of our cruise customers, Noble Caledonia, to see if this battery pack can actually be enough to power one of their ships whilst it's in port, going through its embarkation and debarkation operation. So I think I've answered your question. That we're already doing that, but I think that the question is bigger, that it needs to be really something that the government need to look at, because if these ships are going to be given enough power, look at the other. I've talked about ferries and cruise ships, but the general cargo terminal has regular calls from the Geese line and from Africa Express lines, and they're big reefer ships, so they're effectively fridges that float that need a lot of electricity. So the power that all of these ships would need, if they were all there at the time, is probably about as much power as half of Portsmouth uses on a daily basis. So that's a big challenge.
Yeah, indeed. Thank you for that. Perhaps we can move towards having a discussion amongst the panel, and the other participants, please, if you have any questions that you would like to pose to the panel members, do so in the meantime in the chat. Helen, you give me a heads up in terms of when we're ready to go. Okay, I can see all the panel members there.
We're ready for you now.
Great. Perhaps I would like to pick up on two things from my side. One of them really relates to the investment, a major investment that's required to pull this forward, and perhaps we can get a view from each panel member, starting maybe with Richard. Two things come to my mind, Richard. One is that, of course, in your survey, you ask a lot of questions to the stakeholders, etc., in relation to business going forward, investment decisions, etc. The first part of the question, I presume, how do you see the agenda in terms of the greening credentials and ambitions creeping into the survey that you do in the future? Do you think that will start to become a more and more important part of that? And secondly, perhaps wearing your finance hat, do you think that the increasing requirements from the investors, potential investors, in terms of green credentials for people who would like to develop these technologies need to have, are going to start having some obstacles in terms of securing finance in the future?
Thank you. Quite a lot of questions there, aren't there? All hidden in that one question. Absolutely. I think the biggest challenge, perhaps, is a clarity about definition. It's very difficult, I think, to talk about green in one thing, and I think both Trevor and Ian have touched on that there are so many different aspects to it. I think there's two truths. The whole agenda is has moved very much foursquare and central, and I think the pace of it is accelerated as well, but it is not a single subject matter. And I think that informs probably the next piece, because that wider agenda is on the menu for all stakeholders, whether that's within the shipping industry and the wider shipping industry, or in the investment community or in the banking community. We're talking about a common agenda here. So what I think is, and what I think is very important, is to have good clarity over what one is speaking about, and the evolution of non-financial metrics and easily understood measurement and reporting, etc., is going to be absolutely fundamental to this. Otherwise, you end up in an unsatisfactory situation, in my view, where you don't know whether you're comparing apples with apples, as we say. So I think that's the most important thing. And that space itself is changing very fast. There is actually a project well underway now around setting global standards for other non-financial metrics, effectively, like we have for international financial reporting standards, but to do something similar in the wider environmental, social and governance space, which is what I was alluding to. I think it's important not just to think about the environmental piece, but also to look at these other aspects as well, because those are on the agenda of the stakeholders as well. But overall, I think with that backdrop correctly addressed, I believe there is the appetite to support these developments. There is not a shortage of capacity, in my view, in terms of money in the generality. You always have to remember, and I think sometimes we forget, that money is a market. So it comes with a price that is reflective of the risk involved. And I think one of the things that will help enormously, and we've touched on this earlier, help investors to be comfortable, is if there is more certainty about the landscape going forward. There isn't a one-size-fits-all answer to that, but where there is uncertainty, it makes the risk higher, and therefore the financing cost will be higher, whether that's coming from equity investment or debt investment. It will just make it more expensive. And that perhaps is one thing that if the industry can act collectively, it will help make raising the funds to carry all the new technologies forward more achievable.
Yeah, thank you. Perhaps, Trevor, I know you mentioned that, but in terms of it translating into maybe specific Clarkson's indices, in terms of maybe ship owners or ports with green credentials, how quickly do you think that will come?
Yeah, I think there's lots of interesting work going on there already, Han, and it's a good question. And I agree with Richard. You know, the more you get transparency and standardization, the easier the whole thing is to understand, manage, make investment and lending decisions, etc. I mean, as I said in my presentation, I absolutely believe things like the carbon footprints for various ships or standard ship types will become part of the industry vernacular very, very quickly if they're not already. We're publishing every month, for instance, what we think the average CO2 output is for a whole range of benchmark ships. We can't quite do it for every individual ship, but within a year or two, there will be a lot more data out there. So, yeah, I think all of that kind of stuff's on its way. We're looking at things like, we've traditionally published earnings for different ship types. Publishing what those earnings would be using different types of fuel would be interesting. Publishing what the earnings would be if you had to pay to offset the carbon produced by the voyage is another one we're working on. So yeah, we're taking our first steps in this way down this road, but I think there's a lot more to come, and people will be keen to see this kind of reporting from industry data providers like ourselves, but also from owners, charterers. The travel of direction, the direction of travel is very, very clear. So I would think roll on 3 or 4 years, and we not only all know there's 12 billion tons of seaborne trade and the Clarksons index is $35,000 a day, we'll probably know what the average carbon footprint for every vessel in the fleet is, and what shipping's carbon bill is. I would imagine, just take the European regulation from 2023. It's going to what's the carbon price today? The EU carbon offset price is about $65 per ton of carbon, something like that. Well, you know what a Capesize consumes. You can work out what the extra bill is right there. These will be part of the industry conversation very, very quickly, I believe.
Could I just add, Han, could I just add something which I'm not sure we fully touched on, but it's slightly resonated both with what Trevor's just said, but also with what Ian was talking about. I think one of the key aspects in all this is it is all the stakeholders in the maritime supply chain need to be involved, because it's not only the ship itself, but it's the cargo the ship is carrying and the carbon footprint of that. And I think that is going to get increasing focus as well. So the solutions involve not only engaging the ports and the ship owners, but the ship operators and the cargo interest as well.
Now, yes, I'm conscious all the time. Ian, what I was going to say very, very quickly from your side, as a potential investor in this scenario, do you see yourself having difficulties or otherwise, or being imposed on additional maybe conditions when you actually try to raise finance for some of these investments?
So it's that micro and macro thing. On a micro scale, looking at our own backyard, even now, there's lots of people that can sell you an electric van. The solar panels, the battery storage solutions, these are all good. The big crane manufacturers, Liebherr, Terex, I think that's what they're called now. Used to be Gottwald in a couple of years ago. They can convert these cranes very quickly or sell new cranes that are electric. So as long as we can get the electric supply into the port, procuring that equipment is going to be just as simple as it is procuring equipment now. And the prices are going to come down. It's a competitive market. The difficult bit is what do we do going forward? So my colleagues here have been talking about global challenges of the shipping industry. Now, let's not forget the shipping industry has been pioneers in these sort of things. I remember being at a conference once where somebody that was into computers was trying to tell me how sort of slow and cumbersome the shipping industry was to move to these things, until I reminded them that we'd had autopilots on ships for many, many years, But it won't be long before the shipping world knows where it's going, and their own suppliers will start to come up with solutions for these vessels. And what we need to do as a ports industry is kind of anticipate that, because we don't really want to invest a whole load of money for something that's going to be redundant in a few years' time. Again, from our own perspective, from a ports perspective, looking after what we do is relatively simple, but what our customers do, that's where we need the crystal ball gazing.
Yeah, thank you. I wish we had a lot more time for the panel discussion because there are so many more questions, but I'm going to try and sort of wrap up very quickly. I think we had a very interesting morning of discussions. Richard's presentation revealed that industry professionals' confidence is at the highest level, and we haven't seen this for a long while, including their intentions for investments. The demand at the present time seems to be the biggest driver, with costs, although controlled, are expected to rise. Richard also highlighted the need for governance and social responsibility to go hand in hand with the environment. Trevor's presentation pointed to varying pace of recovery in different sectors of the market after COVID, and such recovery and future plans already incorporate green and technological elements. Energy, fuel, and technology transition, I think, provide us with a number of potential options for the future in these areas. However, the current debate also throws out some of the important questions that we were trying to talk about and are difficult to answer with any certainty at the moment. The technologies available to drive the green agenda and alternative energy solutions remain in contention with each other, with very little certainty as to who will be the winners of the future. This provides us challenges for ports like Portsmouth in making decisions as to which direction to turn to. I'm not sure that we have the required level of collaboration at the moment among the various stakeholders in order to come up with the optimum solutions for the benefit of everyone. Individual categories of stakeholders, such as ports, I don't think can be left alone to make important investment decisions based on partial or uncompleted solutions. There is responsibility on all stakeholders, including ship owners and technology providers, to come together, work together to align standards and create common solutions. And we look forward to further details on the Clean Maritime Demonstration Competition to understand how this can actually happen. And also this perhaps provide us within SMI with an opportunity to return to this debate in the new year with participation of stakeholders within technology and marine community. I know that we haven't managed to cover all the questions that you have posed in the chat, but we will actually pose these to the speakers and come back to you once the seminar is over. Overall, I hope you found today's seminar interesting and thought-provoking. If there are any issues you would like to follow up or explore in more detail, or if you would like more details of our Ports and Terminals Group activities, please feel free to contact Helen Stevens at SMI. And I would like to thank our speakers and all the participants once again, and thank you all.